Before 2010, Todd Combs, not to be confused with Luke Combs, was relatively unknown in the investment world. At that time, he was running a financial-focused investment fund with around $500 million under management and was building a pretty good track record. But that would all change following a series of meetings, initially with Charlie Munger and eventually with Warren Buffett, that would land Todd Combs the job of a lifetime, which is to manage money within Berkshire Hathaway under the greatest investor to ever do it, Warren Buffett. Today, Todd Combs, who is now also the CEO of GEICO, a wholly owned Berkshire subsidiary focused on auto insurance, manages around a $30 billion portfolio of stocks alongside his colleague Ted Weschler, who joined Berkshire Hathaway a little later in the journey. And Combs and Weschler at this point in time look very likely to be the candidates that will eventually take over the over $300 billion portfolio of investments that's largely currently managed by Warren Buffett. Todd Combs recently made a pretty rare appearance on the I Am Home podcast, which is a podcast from the Berkshire subsidiary, the Nebraska Furniture Mart. It was released just before the recent Berkshire Hathaway annual meeting, and in that episode, Todd Combs discussed his journey from being an investment manager to ending up at Berkshire Hathaway and what that story exactly looks like. He also shared how he thinks about analyzing companies and making investments, and he even disclosed two of the stocks that show up in the Berkshire Hathaway 13F, which are investments inside of his portion of the Berkshire portfolio. In this video, I'll go through some of my personal highlights from that roughly hour-long podcast episode and conversation. If you're interested in listening back to the full episode yourself, I'll leave that link down in the description below. And if you enjoy this video and haven't subscribed to the Investing with Tom channel already, please be sure to do so. But without further ado, let's get straight into the video. Now, Todd Combs' journey into becoming an investment manager with Berkshire Hathaway really starts with his journey into investing in the first place. He actually ended up taking a pretty famous, at this point, value investing course at Columbia University under Professor Bruce Greenwald, who has recently retired, but for a long time taught the value investing course at Columbia. In the first half of that course, it was largely around value investing fundamentals, going through case studies of different companies, trying to compare two companies in the same industry against one another from an investment perspective. And the second half of the course was really just a series of guest speakers, many of which were very, very well-known investors. And Bruce Greenwald always liked to kind of finish the semester and finish this series of guest speakers with Warren Buffett coming to speak to the students at Columbia. And in autumn 2001, Warren Buffett came and spoke at the class that Todd Combs was then a student of. And one of the questions that Buffett was asked that really stuck with Todd Combs was around basically how Buffett spends his time. And that's where one of these kind of famous Buffett ideas came from of he just kind of sits around and reads all day. He tries to read about 500 pages a week. That's something that was clarified. There's been a few people kind of over the years saying that Buffett reads 500 pages a day, so it was nice to have that clarified. But that's something that really stuck with Todd Combs. Buffett argued that knowledge compounds, there's no real decay of that knowledge over a long period of time, and Todd Combs tried to pick up that reading habit himself, and like I say, took it on as a bit of a personal challenge to read those 500 pages per week. Now, Combs went on to explain that he got to a point where he was running his financials-focused investment fund and was building up a pretty good track record over time, but he also explained that he was working some pretty massive hours, about 100 hours a week, and although the returns were good and kind of the fund performance was going well, he was finding it very stressful. He did have to manage the fund through the 2008 financial crisis, which running a financial kind of focused fund, I'm sure, was a very volatile period of time. And as part of running his fund, he definitely followed the insurance industry. He used to actually work at Progressive, which is a pretty large and successful public insurance company at this point, and he had long admired Berkshire Hathaway's insurance operations, particularly the unique structure that they've got in place around having permanent capital, having other businesses, and having a lot of flexibility to invest insurance float in publicly traded stocks. And that eventually led to Todd Combs basically reaching out to Charlie Munger and Charlie Munger's assistant, I guess, in the first place, to try and tee up a meeting with Charlie Munger just to kind of meet him and have a conversation with the guy on a trip that Todd Combs was doing to the west coast of the United States. It started with Charlie's assistant just trying to kind of shake out of him what Todd was really after, what his underlying motive kind of was, what was he there to try and sell Charlie. And he eventually managed, I think, to convince Charlie's assistant that he was just genuinely there to meet the guy because he'd admired him for a long period of time. And eventually it landed him, I believe, a 7 a.m. breakfast meeting with Charlie. Todd Combs clearly made a pretty good impression at that breakfast because that breakfast turned into lunch and it was about a 6-hour long meeting and was followed by about a dozen phone calls, which Todd in the podcast episode said he managed to get Charlie down to about 2 or 3 hours at a time rather than the 6 hours they had with their initial meeting. But nonetheless, you can see that Todd Combs was really starting to build a pretty good relationship with Charlie Munger. That eventually led to Charlie suggesting that Todd Combs should go and meet Warren Buffett. And at this point in time, Todd really hadn't cottoned on to the fact that this might end up in a potential job offer to come and work at Berkshire Hathaway. He really thought that he was going to meet Buffett just to kind of have Buffett pick his brain a little bit on some of the companies that were large positions in Todd's portfolio. He thought, maybe Warren and Berkshire had an interest in some of these companies and making an investment in them. But that's really not how the initial meeting with Buffett ended up going. He explained that that meeting went for about 7 hours, a little longer than the initial one with Charlie, and they really only spoke about investing specifically for maybe the last hour or two of that conversation. He and Buffett would kind of throw around random names. Buffett would kind of pick Todd Combs' brain on how he would think about these different companies, kind of how well he knew them, and was really just trying to get a feel for his overall investment process. That meeting ended with Buffett actually pulling out Lou Simpson's contract with Berkshire Hathaway, or specifically in the GEICO subsidiary at Berkshire Hathaway. Now, if you don't know who Lou Simpson is, he's recently passed away, but for a long time he very successfully managed the investment portfolio within GEICO, and it's someone who Warren Buffett had a serious amount of respect for a long period of time. Lou Simpson was able to generate great investment results through making stock market investments at GEICO. So here was Warren Buffett pulling out this copy of Lou Simpson's contract, and he basically started saying, we've been thinking of looking at bringing in an investment manager, and Todd Combs still really not getting the point here, kind of said to Buffett, I can think of 2 or 3 people, maybe do you want me to connect you or that type of thing, and Warren had to kind of set Todd Combs straight and explain that he was actually talking about bringing you, Todd Combs, into Berkshire potentially. And that's how the job at Berkshire came to be for Todd Combs. He said that he made his mind up in about 3 or 5 days. Berkshire ended up putting out a press release on the same day that the press release came out in 2010. Todd Combs sent a letter to his own investors to explain that he would be closing his fund and would be taking the job at Berkshire Hathaway. And he said it was a bit of a weird time. There was a lot of kind of media attention around Todd Combs. They didn't live in a particularly private neighborhood or anything, and he said it was probably more than he and his family had maybe anticipated around just the attention that was put on them, but nonetheless it was time for Todd Combs to get to work at Berkshire. Now, I find the way that Warren Buffett approached the early days of having Todd Combs at Berkshire really quite interesting. It seems like Warren Buffett initially and still to this day has given Todd Combs and Ted Weschler in more recent times really a lot of autonomy with how they manage their investments. Buffett doesn't have to give the seal of approval before they make new stock investments or anything. And in the very early days, Todd Combs was basically handed Lou Simpson's portfolio. It had been sitting kind of as Lou Simpson left it for a couple of years, and Buffett basically said just do what you want with it. He was sort of given this relatively mature portfolio with these Lou Simpson stock picks in it. Some of the companies, were businesses that he knew, but many certainly were not. And this is where Todd Combs actually shared 2 of the initial investments that he made with that Lou Simpson portfolio, and these are actually still stocks that show up in the Berkshire Hathaway 13F today, and those are the 2 major credit card companies in the United States, and largely globally at this point, Visa and MasterCard. Now, if we look at some of the initial purchase dates that show up on many of the 13F kind of scanner sites for Berkshire Hathaway, we can see that MasterCard was initially bought by someone at Berkshire, who we now know to be Todd Combs, in the first quarter of 2011 at an estimated price of about $38 per share. We know that Visa was bought a couple of quarters later in Q3 2011 at about $37 per share. So those two positions have both been in the portfolio for 11 or 12 years now, and the results have been good in both cases, and they've really been exceptional in the case of MasterCard. MasterCard is up almost 10x since making that first investment. Visa is up about 5.5x since making the first investment. And each of those are roughly $1.5 billion positions for Berkshire now. $1.5 billion is about 3 times the size of the fund, the entire fund that Todd Combs was running before Berkshire. So he's been able to, scale his position sizes up nicely, given the fact that he's managing a much larger pool of money these days. A couple of other things that I took away from this podcast is that really Todd Combs' role day-to-day now is very heavy in GEICO. He is the CEO of GEICO, and to a large extent it seems like managing investments and picking stocks has taken a little bit of a back step. He said during the day his time is basically 110% GEICO. He says he still reads well over 500 pages a week, that initial kind of target that Buffett sort of put out there. But he says the mix has changed a lot. He says he would read, easily over 500 pages a week just on GEICO specific material, whereas previously it was reading, 10K's annual reports, transcripts, trade magazines, and so on around specific companies that he was looking to potentially invest in. He explained that the investment reading and research really comes at night. That's what he kind of jokingly said that he does to relax. And he also explained, which I think we picked up from a talk a couple of months ago that Todd Combs was involved with, that he often meets with Warren Buffett on Saturdays to talk investing, I guess, in a more casual setting. Around his investment process, he said Warren and I talk 95 to 99% qualitative. He said the math on valuation is quite straightforward, but he does do deliberately a couple of different things. He says he tries to start with the facts around a company and sort of build a narrative around those facts rather than the other way around, which a lot of people do. Often you hear a story about, why a company is potentially going to succeed and grow and be a great investment and all that sort of thing, and you have to kind of do some fact checking later with the underlying numbers. Todd Combs tries to avoid that trap and sort of reverse that process. He explained that he even tries to go so far as to not even know the market cap of a company when he's looking at it. He said that, 80 to 90% of the time you'll do your research and estimate what you might buy that entire business for, and 80 to 90% of the time you're within, say, 20% of the enterprise value or the market cap. That's all to say that most businesses and most stocks, they tend to be priced at mostly fair value most of the time. But he explained that occasionally something, will really jump out at you. He actually gave MasterCard as an example of that. He said when MasterCard went public, he deliberately avoided looking at what the market cap was. He wanted to do his own work on the company and value it kind of independently of that information first. He said that MasterCard had gone public at about $3.5 billion, a figure that he tried really hard to avoid hearing. But he had valued it kind of independently before finding out that number at more like $30 billion. He explained it's a great way to avoid sort of the anchoring effect of knowing that market cap already. And he says that although he doesn't do it anymore, he actually used to short stocks from time to time. And he explained he basically used that exact same process. He'd, do the independent research and say this thing isn't worth anything, and then the market cap is X. And he could make a short kind of bet from there. Couple of other things I picked up. One of the core ideas he tried to get across to Buffett actually when he first joined Berkshire that he felt really made a difference for him is just understanding the idea that risks are not linear. And the most obvious kind of match in terms of that understanding of risk at Berkshire is really to do with their insurance operations. Todd Combs was kind of saying that, risks aren't linear. When you double the severity of a particular event, generally the frequency of that event happening tends to go down by more than that factor. A hurricane, for example, occurring in Berkshire's kind of super catastrophe reinsurance business might be a good example of that, where it's a very severe event, and the sort of increasingly severe something like the hurricane gets, the less frequently those events tend to actually happen. And it's really not a linear scale. It's not like if you have one of these natural disasters that's sort of twice as catastrophic as a baseline, that it happens half the time. It might only happen 1/10 of the time. It's more of a log-scaled kind of pattern that you tend to see in these things. He used some more sort of financial examples of that, saying that most of the time, if you sell something like a way out of the money put option, most of the time they'll expire worthless for the people who've bought that option, and you will sort of collect a small premium of the seller of that way out of the money put option. But he said the 1 out of 10 times that it goes against you, you get tattooed and you lose everything. He explained that sort of the brilliance of someone like a G. Jane in Berkshire's insurance businesses is he really hasn't blown up by betting that something, extreme won't happen and not getting paid appropriately for writing that insurance risk. And he actually specifically mentioned a book around some of these sort of risk ideas, which is called Ubiquity by Mark Buchanan. Now, there was a whole lot more covered in that podcast with Todd Combs than I've been able to speak about in this video. Everything from some of his usual highlights at the Berkshire Hathaway annual meeting and getting to reconnect with people, to his preferences in home furnishings and the purchase of a very large TV, to his favorite GEICO commercial, and a whole bunch more. So if you're interested in checking out the full podcast episode, it will be linked in the description below. But those were some of my highlights, particularly on the investment front, and I guess the Berkshire Hathaway origin story for Todd Combs. So I hope you enjoyed it. Let me know down in the description what you think of some of these ideas and lessons and the story of kind of Todd Combs joining Berkshire. But that's it from me for this one, and I'll see you in the next video. Cheers.